Trump's aggressive reciprocal tariff move, the odds of 5 rate cuts from the Federal Reserve in 2025 are surging on Polymarket. The markets are betting that the Fed will be forced to ease much faster than expected. And on the CME group, the next FOMC meeting is in about 30 days, 16 hours. And the odds have shifted from 63.5% people expecting them to keep rates steady, 36.5% are expecting a rate cut. In my video yesterday, it was actually 70.2% were expecting them to keep it steady. So the odds are shifting. What would cause the Fed to cut rates in the next 30 days would be more panic in the market. You know, the Fed usually responds too late. So they wouldn't cut rates unless they absolutely needed to. So pay close attention because this is extremely important right here. Anthony Pompliano posted this, and I've been sharing this in the past few videos talking about trueflation because the Federal Reserve may have to make an emergency rate cut soon. Inflation has fallen to the lowest levels since 2020. And if this continues, it will be a massive problem because the Fed has said they want to keep inflation at 2%. If we go beneath that, that's actually not a good thing. And if we stay above it, that's not a good thing as well, too. So the Fed has a very difficult job to do. And tomorrow is Black Monday, so people are on edge right now, wondering what's about to happen to their portfolios. So could Donald Trump be creating the next 2008 on purpose? And is his goal to collapse the crypto and the stock market to be able to buy in cheaper? Well, I thought this was an interesting post from my lady here on Twitter, showing how he's making everyone poor to save the US from a massive $7 trillion debt bubble and what to do before Black Monday. Because this fear and greed index, different from the crypto one, is actually showing that it hit 4, the lowest level ever recorded. So sentiment is in the dumpster right now. It's lower than COVID, it's lower than the FTX collapse, lower than the 2008 crash. This isn't just panic, it's planned fear. And for a lot of people, it feels like 2008 again, with debt piling up, banks are fragile, markets are ignoring the warning signs, and retail is getting completely caught off guard. Here's the problem. The US needs to refinance $7 trillion of debt over the next 6 months, but yet interest rates are still high. So how do you make refinancing cheaper? Well, one way is to let the markets crash, which causes bonds to rally. And when bonds rally, yields drop, allowing the government to refinance for less. So here's a possible explanation for what Trump could be planning, because he might be using tariffs as a multi-pronged tool to force a market correction and shift economic dynamics in his favor, because stocks in the crypto market are crashing because tariffs right now. You know, everyone's freaking out. Anytime he mentions tariffs, traders with like 7 different monitors and paper hands sell out because they got no grit. So this is signaling massive trade disruptions and higher costs for businesses, which spooks traders into selling risky assets and fleeing to safer ones like US Treasury bonds, driving bond prices up and yields down. And if we look at the US 10-year right now, it has dropped from 4.8% to 3.9%. And if we also look at the 2-year, I talked about this in a previous video, how it's dropped from 4.4%, getting rejected from this zone that was support January of 2024 as resistance, going from upwards of 5.2% to 3.5% now. So lower yields means cheaper borrowing costs for the government, because with $7 trillion in debt maturing this year, refinancing at, let's say, 3% instead of 4.5% could save billions in interest payments annually. And this is critical when the federal budget's already stretched extremely thin right now. Because as you can see right here on the US debt clock, the US federal spending is at $7 trillion, but yet the US federal tax revenue is only $5 trillion. So there's $2 trillion that they need to come up with, because the deficit right now is at $2 trillion. And it's not just the $36.6 trillion US national debt that's the main problem here. It's the interest that the government has to pay on that debt that they can't afford. So the secret plan could be to engineer the short-term market chaos to reset the board. And by crashing stocks and crypto, Trump might be aiming to pressure the Federal Reserve to cut rates, or at least that's what he said, amplifying the drop in yields. So this makes refinancing the debt cheaper, easier fiscal strain. You know, tariffs could also be a negotiation chip, threatening high levies, scaring the market, then scale them back in trade deals, forcing the hands of other countries to negotiate. Because as Eric Trump said in a post that I talked about yesterday, if you didn't watch that video, go check that video out, how he's seen this movie play out his entire life, and how it would be stupid to be the last country to try and negotiate a deal with the United States. The smartest countries are going to move first to drop their tariffs on the United States so they can see the reciprocal tariffs drop. Plus, if manufacturing returns to the US as a result, it's a long-term win, even if it's painful now, because more businesses, more farms, more factories will do business in the United States rather than going overseas because the tariffs are just too high to have a profitable business. So why the timing right now? If Trump said the markets are going to boom, why is he causing this crash? Well, the debt deadline looms, and he's front-loading the pain early in his term to get this ugly stuff out the way, then pivot to growth policies like tax cuts later, hoping that the markets will recover by midterms. So the bond market's reaction, which is yields dropping, shows that investors are buying the safety play, at least for right now, selling out of riskier stuff like stocks and crypto. But the debt angle fits the puzzle pieces, especially with $7 trillion on the line. It's a high-stake gamble, guys. Tank the market short term, save on debt costs, then ride a recovery wave. Super, super risky, but potentially brilliant if it works. So what do you think? In the short term, the global response is going to be very harsh. Trade partners will retaliate, US exports will suffer, corporate profits are going to shrink, supply chains are going to slow down, and behind the scenes, liquidity is drying up, volume is falling, order books are thin, markets look stable, but they're not. They're propped up on a mountain of debt, which is a similar setup to what we saw in 2008 before the collapse. So what about crypto? Well, it's positioned to benefit long term with friendlier regulation policies, stablecoin bills coming, the strategic crypto reserve, Bitcoin stockpile, companies buying more crypto, you name it. But during massive volatility like this, when people just don't know what Trump's moves are going to do to the market, well, Bitcoin, Ethereum get sold for liquidity. That gets moved into bonds. Altcoins drop 65, some of them 95%, which I showed you at the beginning of this video. Over the past year, some of these are down already 70%. And some of these are big projects, guys. These aren't fly-by-night companies. Optimism is down 79%, Polygon 81%, Near Protocol 68%, Render, some of the best AI projects in the game, 70%. Even ICP, one of the best projects in the industry, 72%. So only after the dust settles will crypto rally. And when the Fed finally decides to pivot, it could happen very, very quick with emergency rate cut, quantitative easing, liquidity surge, adding to their balance sheet. The markets could reprice very, very quickly. And crypto could lead the rebound, but not before a deep correction first, leading a lot of people to believe that we actually have much further to go to the downside before we work our way on out of here.